The ASX mining sector has been absolutely smashed over the last few months. Billions wiped off the market, but here's what nobody's talking about. Some of Australia's best gold and lithium miners are now sitting 25 to 30% below their all-time highs. And my buying period is in 4 days. So today I'm breaking down exactly what miners I'm watching, which ones I think are genuinely undervalued right now, and which ones I think you should actually stay away from despite their massive 250% run. Let's get into it. Alright, I've done a proper deep dive on 4 stocks you should be checking out right now. Here's my honest take. And just a reminder, I'm not a financial advisor, so treat this as research to inform you on your own decisions rather than a recommendation. Let's get started. Alright, first up is NST, Northern Star Resources. This is a genuinely high quality gold miner. NST has maintained its FY26 production guideline of over 1.5 million ounces, reporting an underlying free cash of $301 million for the quarter. The all-time high was $31.96 back in March of 2026, and it's currently sitting at $22 to $23 roughly. So that's about a 28% below its peak, which aligns with what we're looking for. We're looking for great companies with heaps of cash that have the potential to rally back. Now the risk here is cost pressure though. Total capital growth expenditure is projected to rise between 2.3 to 2.4 billion, primarily due to the cost pressures of the flagship KCGM. The bull case though is strong. Central bank buying at a multi-decade high, geopolitical safe haven, and inflation hedging all support sustainable gold strength, NST's biggest external lever. If gold stays elevated and those capital projects deliver, NST has some serious upside. Analysts are predicting the price range between 20 to 35, which is a really large spread, but definitely suggests room on the upper end for a real run. My view, NST is the cleaner of the 2 gold plays I'm about to show you today. Quality assets, solid cash flow, and gold tailwinds are real right now. Next up is EVN, Evolution Mining. Evolution Mining delivered record cash flows and moved to a net cash in March 2026 quarter, which is a massive positive. They've gone from $1.6 billion in net debt to net cash in 2 years. Record underlying EBITDA reached $1.6 billion, up 59%. The 52-week range is $6.42 to $17.75, with all-time highs of $17.75 in March of 2026. Currently around $13 to $14, it's about 25 to 30% below its peak, consistent with that of our previous company, NST. Analyst consensus is that the target price should be around $14.95. which is only 7% above current levels. However, it is still roughly 20 to 30% below all-time range. EVN is arguably the financially cleaner of the gold miner right now, given its net cash position and record results. Less upside than NST potentially, but a lower risk reward too. Between NST and EVN, both are solid. I think I'd be leaning towards NST because of its operational leverage due to the gold price upside it carries. EVN is cleaner financially right now. However, if I was choosing between the two, I would lean towards NST for its higher potential upside given gold's current environment, but EVN is definitely the safer pick. PLS is our third and final stock we're looking to add to the portfolio. The lithium angle is interesting given the current oil crisis we spoke about in our last video, link in bio. The Middle East crisis is linked to the ASX uranium and lithium stocks, which ties directly into a huge concentration of price creep, up 57% quarter on quarter. This company in particular, similar to the last two, is sitting on a ton of cash, $952 million, giving them some serious flexibility to continue to grow in this market. The risk is that lithium holds a high volatility and analyst targets are mixed. 5 buy ratings, 5 hold ratings, and 3 sell ratings with a consensus target nearing $3 suggests the stock may have run ahead of itself from these December lows. The oil crisis narrative does give lithium a short-term tailwind which could benefit PLS. My view is though, PLS is even more speculative than NST and EVN. The oil crisis angle makes it interesting but as an actual investment, it's very high risk given the lithium price volatility. Now, this one we won't be adding to the portfolio, but it's one that's had a great run, and that is Mineral Resources. This one's a complicated one, and I'd be cautious. The 250% run that it's had recently, the stock has nearly quadrupled since April lows of 2025. Now, the concern is that the average broker price now sits at about $60.35, still roughly 4% below current closing levels. The stock is trading at or above where analysts think its fair value is right now after a massive run. New investors like myself probably should stay away from it and wait for a quarterly downturn or perhaps a drop in price before jumping in. In my view, Min is definitely one to watch, but not necessarily one to chase right now. I'm going to wait for a pullback on the quarterly update and confirm the thesis before buying. Bottom line is though, I've got 4 days to decide what I'm going to do with my money, as I want to consistently put it into the market to start working for me. Over the next 4 days, I'm going to sit down and have a look at some ETFs that I'll be bringing to you that might be better alternatives for my money. However, these individual stocks are definitely an interesting and genuinely worth the risk potentially to give us some decent exposure in this sector and a good rally for our money. Let me know what you guys think about the current mining sector. I'd love to hear your thoughts on what you think about those 3 stocks and what you think about minerals. I think it's definitely had its run, but let me know if you think otherwise.